And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these stock markets, commodity markets, talking economics, breaking down all of the news, the price action, anything that is impacting financial markets out there on a daily basis, give you guys some analysis so you can better run your daily routine. And welcome out again, hashtag Team Tackle in the chat as we get the conversation started for the week. And this week is going to be a big one here. We've got earnings season started for many of the big banks out there, Delta Airlines, many big companies that are going to be kicking off Q3 earnings reporting. We're going to be detailing that as we get those reports a little bit later in the week. Fed minutes, more economic data, inflation pressure, you name it. A lot of stuff to get out there, but maybe most importantly will be the technical analysis as we're heading for a potential bear stop out day. I will break that all down here today on our Monday show. Let's bring the coaches in one at a time, though. First, you, Matt. How you doing today, sir?
You know, Tim, doing absolutely fantastic. I'm excited to be here with the crew to break down the market activity here today.
Absolutely. And Mark, how are you, sir? Starting the week out here in the markets?
Dude, you know, just you go to work, right? You go to work one way or another. Mm-hmm. So low energy, but I'm sure that will pick up as I hang out with all you fine gentlemen.
100%. And we've got Gino here to join us as he always does on Monday. We've got another Gino gem planned for a little bit later in the show. Gino, I think you're going to be highlighting a position sizing tool that traders can use out there to better understand what their risk is. Is that right?
Yes, one of the most important things in trading. So I'm excited to show you this little tool that makes life easy. So yeah, we'll get to that towards the end.
Yeah, absolutely. All right, let's get right down to the analysis because we got a lot to unpack here, Matt. It's going to be a busy week of news for earnings when we do get into those reports a little bit later in the week. Earnings preview here, we're expecting a really strong quarter. I saw projections from FactSet around 28, 29%, something like that in terms of quarterly growth. What is your read on the market heading into earnings season?
Got to be 30.
30? Got to hit 30?
Got to be 30. No, It doesn't have to be 30, but we do have, I am anticipating a very good start to earnings season. When we're talking about earnings, it always starts with the banks, and the banks report this week. So you got 20 of the major financial banks reporting this week, led by JP Morgan, Bank of America, Wells Fargo, Morgan Stanley, Citibank, Goldman Sachs, BlackRock. So obviously the juggernaut of financial, the juggernaut of the financial sector is reporting this week. I fully expect a rock star earnings season from a reporting perspective. That doesn't mean a rock star earnings season from a price perspective. Obviously, we're going to have to read that in the time. But when you're talking about earnings, obviously, the bar is set very high. Very high. Now, I mean, the bar in expectations is set very high. The expectations from raw numbers isn't. That's one of the reasons why we have to see 85, 86, 87% of companies beating EPS numbers, 85, 86, 87% of companies beating overall revenue numbers. And I think you're going to get off to a very good start with the financial sector from a reporting perspective this week. Obviously, you're talking about a financial sector that is towards the all-time highs, recently has broken out of the historical ranges. And so you're approaching a week in the market where, you know, the market's up a good 3-4% in the last week. You've just recently broken out in the financial sector. Can we get that lift off though? And can earnings be the catalyst for that? Open question, but one I'm looking forward to analyzing this week with the team.
Yeah. And banks, and obviously they're the ones who start out the earnings season, and they had a really wonderful quarter last quarter as well. And we're expecting strong numbers. There was volatility in the quarter, so the trading firms usually benefit from that. It's going to be interesting to see what kind of commentary they have out there as well. I'm expecting a lot of people talking about rising inflation, sticky inflation, supply chain bottlenecks, all that kind of stuff. But really the raw data is what's going to matter.
We know the words. We know the words, right? Rising inflation, supply chain, disruptions. We know what earnings are going to be. We know the complaints that are going to happen. Number one, rising dollar, rising inflation, supply chain gut. It's what was it, 71% of companies that have reported have already cited those
Supply chain
concerns on
problems,
supply
yeah.
chain problems. And so, yeah, we know the theme going into it. It's a matter of, does price follow expectations here? The expectations are fairly high. Let's see if price can follow through with that. And one thing that is interesting this quarter that has been unlike previous quarters in the pandemic is the expectations here. Over the course of the last quarter, let's come out to the broad market very quickly. Over the course of the last quarter, this is the picture you have from quarter to quarter. You have the July, and I'll kind of highlight it here. Well, let's get my box here. If I can get my box, I will get my box. Eventually, I'll get my box.
We're gonna get that box up there.
My box is having a hard time. Let's go back to the box. There's the box. Okay, so here's your basically your reporting period, right? So from a technical perspective, you were having a robust start of the quarter, but it has basically been given up. I don't think you have this, oh my goodness, price has to prove itself coming into this earnings. Whereas in recent earnings, you had that and then stabilization. The one before that, look at that price appreciation. You're near the all-time highs. And so the expectation, I think, is a little bit different given the fact that we've been dealing with some volatility over the last month or so. You're talking about potential recovery analysis in the S&P. And so can earnings be that catalyst to propel bear stop out days, start a new trend? These are all open questions I have that start to get answered this week.
Yeah. And the price performance is a really good point, because even like in January and April and July, we had been running into the earnings season, like you just highlighted, and so we kind of had those prove it moments, right? We haven't really had that heading into this earnings season. I know valuations are still off the charts there, Mark. But Mark, let's get your thoughts on this real quickly. Just heading into earnings season, starting the week, what is your, kind of thoughts on the market broadly?
The market just desperately needs something to get excited about, right? It was a nice support level, nice little rally, but the market can't just survive on, they can survive, but like taking that next level, right? Reclaiming those all-time highs on the elimination of bearish catalysts, right? So debt ceiling goes away, Evergrande goes away, provides these little rallies, but the that bullish theme, that thing that gets traders excited, it needs that to, in my opinion, to take those like next steps, legs up. It can flatline, it can hang out, it can go up and down, within a range on no good news. But to get excited, to get like, higher prices, it's like Matt, he uses this phrase all the time, to get people willing to buy higher prices. We saw last week they'll buy at lower prices, right? They'll buy at lower prices, especially coming off of support. What gets them the higher and higher? I mean, that usually is a bullish theme or strong momentum. Earnings season can provide that. Big, huge earnings this season. This time, we're not having the ramp up into earnings that we have had the last quarter. As traders and investors are like, kind of in a wait and see, right? Let's see how this plays out. A big earnings season could provide that. Going to be a lot of fireworks the next couple of weeks, especially on the individual and sector level.
Yeah.
And let me just one point to that, Mark. Yeah, I certainly do agree that from a catalyst perspective, when you're looking at the Evergrande situation out of China and when you're looking at the debt situation out of America, those have been two positive catalysts in the last week and a half, correct?
Yeah, a couple weeks, yeah.
Yeah,
but it's not like we cured the situation in either one of those, right? It was literally kick can down road. That's what we did. That's what China did. Hey, let's go ahead and do a little bailout. It's not like they fixed the debt problem. Well, in America, right, last week, we basically had a compromise between the Democrats and the Republicans to solve the debt problem, correct? Oh, yeah, it's solved. It's solved till December 3rd. And McConnell has already told Biden, it ain't happening again.
We're not doing
under
that again.
no circumstances are we doing this again. And so, yeah, they got 2 months, but it's not exactly like it fixed the problem. And so those short-term bumps the market had, rightly so, those are both positive catalysts, but they don't have the legs to really drive the market and shift patterns and shift trends. And that's what earnings can provide. Earnings is one of those catalysts that can spark trends, could break patterns. Because when you come into an earnings report on an individual stock, right? Let's just take J.P. Morgan for example. J.P. Morgan's price performance, to me, it matters to justify the current upward movement in price it has had. But does the technical analysis have, well, in your mind, does the technical analysis have anything to, or the pattern have anything to do with how the market is going to behave when those numbers come out? And I believe those numbers come out literally
Wednesday.
tomorrow.
Yeah.
Or excuse me, Wednesday morning.
Wednesday morning. Yeah. Yeah. No, I don't think so. I think JP Morgan is going to move based on the reaction to the report that they put out there. I mean, did they come out and be top and bottom line? Absolutely.
Which means it can be a trend starter,
Mhm.
right?
Absolutely.
It can be a trend starter. And so I certainly agree with Mark that there have been some positive catalysts in the market, and those positive catalysts, guys, has had a fairly important impact on the marketplace. Simply because it's not just going gangbusters right now does not mean those two situations that Mark and I have been talking about didn't have a positive impact on the market. They certainly did. There's a reason we're talking about bear stop out potential this week. And it's a lot of that is on the backs of the trend losing momentum, the pattern shifting, and a lot of that slowing momentum. And I detailed this last week from a technical perspective in the market with the slowing momentum. And so once again, when you're looking at that, if my Epic pen will ever, I might just have this up constantly, Tim, so I don't have to do that. But when you're looking at the momentum of the marketplace over the course of the last couple waves down, you have a wave that goes like that. You can just kind of visually see it. You see a contraction wave there. Then you look at your support levels. Those support levels are contracting as well. And so you see a little bit of slowing momentum in the marketplace in this downtrend. And then the first pattern you violated was the 9 EMA right here. Let's go ahead and give that a nice little circle. You violated that pattern right there. And then ultimately what you are now creating is a little bit of the proverbial 1, 2, 3 reversal type formation in the marketplace that has become fairly popular to the market, where you have that slowing momentum and then you have this type of number where potentially you see that bear stop out day. And so I do think that these news stories, the Evergrande situation out of China and the debt situation last week out of the United States, I do think they have been positive catalysts, and I do think they have had an impact on the overall mentality of the market, given that we have seen some slowing momentum in this trend. We have seen some patterns violate to a certain extent, and the stabilization argument in the market is coming into focus right before we start getting into that. We're not even going to call it Santa Claus. We're just going to call it Postmates birthday from now on. October 13th, Postmates birthday. There's the landmark, the date we all kind of track there. Post October 13th, you can start seeing Santa Claus coming into that nice little November and December rally. It obviously starts with Evergrande and the debt situation, again, not getting fixed, but just kicking that can down the road. And then you come into the if A, then B scenarios. If A, positive catalyst from an earnings perspective, then B, price follows it, you can certainly start seeing bullish trends in the S&P 500. And I'm talking from a short-term perspective. So I see some positive scenarios coming into the future, but we are not out of the woods yet regarding this volatility. We got to start with earnings, and we got to come through earnings season before we really start to see some clear directions in the marketplace. And I think you'll understand a little bit more of what I'm talking about when we start getting into the sector conversations, because there's a little bit of hot and a little bit of cold out there right now.
Yeah, and the sectors do tell a big part of the story. And one thing that we do each and every Monday is we go through those top-down analysis style to really highlight it. And I want to get there in just a second here, Matt. But I got a question here on the S&P, because that bear stop out day would correspond to me with a weekly confirmation point as well. And they kind of would line up there. A consolidation here, back up above that 20 and 50 period moving average, a little break back above the pivot points. If you look at the weekly chart, I mean, it kind of dials right in with those locations as well, and it would kind of clean up a lot of the time frame analysis for me. What are you seeing across the different time frames here on the S&P that you want to highlight for the team?
Well, there's a reason we're starting to look at bear stop out day here, and the reason is you kind of come out to the weekly chart and you see this as a bullish retracement where you're fighting for some degree of confirmation on the weekly chart. That's certainly, and again, one day does not mean 1 week. Let's get through the week, right? We can test up, come right back down. Look at the candle here, test up, come right back down. So let's kind of see that confirmation, but I certainly agree with you that a positive week following positive reaction to the financial reports this week certainly could see confirmation here on the weekly chart. Now, what can that lead into? We've already talked about the daily chart a little bit. You have the slowing momentum. That's kind of one of the reasons you're looking at that weekly chart saying, are we going to get that confirmation because of everything we've discussed on this slowing momentum of the S&P? Bear stop out day, you're going to look at this from an intraday perspective, and I think that's still where I'm analyzing it. I do love the hourly chart here, 30-minute chart. It kind of tells the story as well. But when we were talking last week, we started off the week talking about how important 4260 was to hold, and eventually how important it was to break back up above that 4360 barrier. We did that last week. We both held the 4260 barrier and broke out of the 4360 barrier. That was a wide range neutrality on the S&P, but we're dealing with volatility. But it's important because it established these key levels that we are looking at from a reversal perspective, and why we're talking about bear stop out day here today. And again, bear stop out day is a very aggressive type technical situation. You're talking about a bearish downtrend where you now are talking about immediately going into a bullish uptrend without the time frame that it typically takes in terms of that traditional W or head and shoulders reversal pattern. And one key element to look at yet again when you're talking about the futures market as well as today's price action is, where did this come into? When you looked at every single news article this morning before the actual cash open, it was talking about concern in the market. It was talking about markets coming down. Well, that's because the futures market yesterday saw a little bit of a downtick, and you're coming into support on the futures price. But what held? 4360 yet again, 4360. 4360, double bottom there at 4360. You kind of come into the 30-minute chart and you're starting to see a little bit of where can this, excuse me, let me come back out to the hourly chart. You're saying, okay, where can this continue? Where ultimately is bear stop out is what I'm trying to figure out here. If bear stop out starts with the reversal at 4260, confirm against 4260, double bottom there at 4260 for that confirmation. Because again, coming out to the daily chart, Tim, to answer the question in detail, you're looking for that level. Where is that level ultimately that leads to bear stop out day, right? Well, everybody and their dog is going to point to the 50-day moving average on the daily chart. And I am as well. It plays a role. It's going to play a role here as well. But when I'm looking at the hourly chart, there is a level that I'm looking at, two very important levels in terms of the recovery to the S&P here, 4225. Old support from last week, new resistance over here, dinged it earlier on the overnight action on Friday, dinged it there, came right back down. That's a line in the sand that the market has told us that is going to be important. Keep an eye on that. Ultimately, bear stop out day, when you look at this here, the consolidation at 4475, 4475, we're walking the dog and we're going up the stairs. We're breaking 4225. Second set of resistance is 4275. You come out to the daily chart. Look at that first break there at 4225. You couple that right there with the 50-day moving average at 4430. You got to like bear stop out day that coincides very nicely from an intraday perspective. Coupling it with the daily perspective, 4225 by 4230 makes a lot of sense to me. Does that make sense on the weekly chart? Well, my goodness, that breaks out of last week would be confirmation from last week as well. Multiple time frames lead to bear stop out at 4430.
4430 sounds like a number I'm going to recommend everybody out there put on your sheet and maybe even create an alert. And that was from 917, by the way. That little breakdown off the 50 period moving average that you highlighted as the intraday breakdown as well. It all kind of lined up right there. So that does make sense psychologically and from a technical perspective. All right, love it. Let's flash through the indexes here and then let's get into sector analysis, Matt, where the story really is happening in these markets. And just tell me what you're seeing across the other major indexes first.
What's impressive about the Dow Jones right now, and again, a lot is going to be said about the Dow Jones given the heavy financial influence on the Dow Jones. But I'm looking at a double bottom, double top scenario in the short term. The double bottom happened right where the 200-day moving average is. That is a historically known support level as well. The resistance levels and why I've felt like in this phase of volatility, this moment of volatility, yeah, we've been talking a lot about politics, and I'm talking not us at Tackle. I'm talking markets, right? Markets have. You can't go to a financial news site out there. And Tim, how many times has this occurred in the last 2 weeks, just between conversations of you and I? We're reading some news, we're analyzing some news out there, and I say that's not a financial story.
Yeah, it happens at least daily, and we're not talking about stories we dig from the barrel of the, at the bottom either. We're talking about major headlines that are across major financial stories.
Yes. Major headlines.
That's not a financial news story. Yeah.
But again, it's been in our face nonstop, constantly. And so when you're looking at this situation, even in the face of all of that news and all of the hypothetical concern, and are they going to, I'm going to have to stop my video every time I do it. I get an error message. Are they going to come to some agreement on a debt situation? Are they going to come to some agreement on the 1.2 trillion infrastructure plan? What number, and again, what number is going to be the final price tag of the human infrastructure plan that is called the Build Back Better plan? These are all political stories that have a hint of financial market stories in them. Right? In the face of that, what have we seen? We've seen a market in the Dow Jones, double bottom, very clean, right where that 200-day moving average is. We've seen a resistance get drilled multiple times, right where that 50-day moving average is. And I said this 2 weeks ago in the face of the volatility, and I said it last week as well when you've asked me numerous questions on it, and I've said I've gotten this as a technical market. In the face of all of that news, I still have this as a technical driven marketplace. I just see too much consistency from a technical analysis perspective to think that it is not playing a role right now. Look at the 50-day moving average here. Look at the 200-day moving average there, but really kind of that 33,500 level. And then ultimately you're looking at 35,000. I got this as a very important zone to the Dow Jones. It starts right where the 50-day moving average is, right there at about 34,850. And then top range, if you want to call it bear stop out, this is not a bear stop out. This is a traditional reversal formation. Yes, it's choppy. Yes, it's volatile, but it's a double bottom, double top. Ultimate confirmation starts at 35,000. Aggressive confirmation starts with the close above the 50-day moving average.
35,000 on the Dow, 4430 on the S&P. Those are the two big ones. What about the NASDAQ here, Matt? As we're kind of mapping out all these technicals.
NASDAQ's gross.
Yeah.
Yeah, I mean, it just is.
Yeah.
It just is. It's the only area of the market last week in a marketplace that, for the most part, I think us and a lot of other traders out there saw the market finding some degree of stability last week. The slowing momentum in the S&P was real. I just don't see the same picture in the actual NASDAQ here. A lot of my analysis in the S&P, if you'll remember, starts with the slowing momentum, finding support, the pivot relationship. All of those speak to me of that 1, 2, 3 reversal type formation that has become fairly popular to traders post-pandemic. But when I'm looking at the NASDAQ here, I'm not sure you can paint the same argument when you go from 15,700 down to the base range about 14.9. That's an 800-point movement. And then you go from about 15,330 all the way down to 14,400. You actually see that as an increasing bearish momentum environment, not a decreasing bearish momentum environment. And so I'm going to give momentum very similar in the NASDAQ. I see it as slowing in the S&P. I see it as double bottom, double top scenario in the Dow. And I just see this, quite frankly, as yes, it could follow the rest of the market, and it certainly could break back up above 15,000, which is ultimately would be bear stop out day. But I see this area of the market getting carried then at that point, following the rest of the market instead of leading the market. And I just don't know if you want to be a part of the NASDAQ when it's following industrial or it's following finance. I mean, that's not a position that I see as strength. You want to talk about the NASDAQ when it's a leader out there, when it's dragging everything else behind it. And so for me, I just see this as a little bit of a bump that has been based a little bit that's happening with the slowing momentum in the rest of the areas of the market. I don't see this as a trend shift or a positive catalyst yet. Not yet. It could happen, but it's got to break back up above 15,000 first. And then if it does do that, then you might have a more clearer picture to the top side. And I say that as a might because you still have a lot of overhead resistance levels there. Right now, I see this as a very technically challenging environment, but I don't have any momentum shifts here. I got a very similar momentum environment, which means I got a downgrade at tackle last week.
Yeah, exactly. And one of the sectors that did catch the downgrade, like you just mentioned, was technology. And that does make sense with what's happening here with the NQ contract. All right, very good. From the top end, then indexes, we've kind of hit them and identified some levels, 4430, 35,000.
Listen, I'll do the Russell real fast.
All right.
You're in the middle of a wide range and you're in the middle of a symmetrical triangle. Have fun.
Is that some kind of moving average soup there, Mark? 4 different
Dude, what
average,
is this?
all just
wide range,
consolidating.
the jaws coming down.
Yeah.
That's the great white. That's the new great white shark pattern.
Dude, I'll tell you what the Russell's been good for, though. Cash flow condors here for about 9 months. I keep getting
cash
reminded
flow
of that.
condors just keeps being amazing.
Just knocking down neutral cash flow strategy there for quite some time. All right, let's get into sector analysis then here, Matt, if we can. And let's start with the growth areas of the market. You already kind of highlighted, the NQ contract. Why don't we start right with technology then and tell me what you're seeing in this chart right here. And it did catch our downgrade, like you mentioned, down to neutrality at 40.
It did. Well, and again, a lot of that is just based on momentum and pattern. And so until, we were in the pre-production show here and I made a statement. For you to get an upgrade in this marketplace, you got to break something. You got to break a trend. You got to break a pattern. You can't just follow the market going up, coming into resistance, and then getting blasted right back down. You gotta have a psychological shift in trends or patterns. And right now, I see the NASDAQ as a bearish retracement that's fighting up against the 20 period moving average. I got this as a very mixed area of the marketplace. When you're talking about some of that bullish opportunity out there, when we're looking at, and again, a lot of this will be coupled with a violation of that 20-day moving average. And we already talked about that 15,000 level that we're tracking in the NASDAQ. A couple stocks to keep an eye, however, in this space. First Solar here. First Solar on the stock report blasting over 100. You got to like that here today in the marketplace. You're also looking at a little bit of Oracle on our options report over the weekend as well. Nice little multiple time frame type of movements in Oracle to break last week, continuation to start off this week. Both those look fairly good. And then AMD, AMD is not for the faint of heart here. Everybody that trades AMD knows exactly what it can do. It breaks 100, it can get real ugly real fast. But I like this from a potential breakout perspective. Nice double bottom right there at 100. You're looking at a potential breakout there on AMD. That's the positive side of the equation. But before this sector starts getting a lot more love from us at Tackle or from market participants in general, you really got to start with some turnaround analysis from an NVIDIA perspective. The semiconductors have been very choppy recently. Yeah, Oracle's been doing fairly good. NVIDIA has been forming a bearish retracement with potential confirmation to the downside. And so I do think we need to see a little bit more clarity in the semiconductors. And then when it comes to the biggest dog of them all, Apple, we got to see some clarity out of Apple as well. It's tough for me to see the NASDAQ turning around if Apple doesn't turn it around. And Apple has one of those opportunities. Obviously, we got earnings coming up in about a couple weeks from now, but Apple's in one of those zones, 140, 200-day moving average catching up. We know the importance of the 200-day moving average. I mean, everybody's going to look at that 200-day moving average at any point that it ever gets anywhere near the number one market cap company in the world. And so Apple's in one of those interesting moments on the weekly chart where you have the backdrop of the 50-day moving average, the backdrop of the 200-day moving average. You got some fairly interesting trend line analysis happening as well when you're talking about that trend line there, or whether you want to connect a little bit more of a momentum trend line right there as well. And so it's got some fairly decent support levels underneath the current price action at 140. I would call 140 support with the backdrop all the way down to 133. Obviously, earnings is going to play a role in all of this, but it's hard for me to see the NASDAQ, recovering and showing that break of above 15,000 if we're not looking at Apple saying Apple held 140 as well. So keep an eye on the number one market cap company. It's going to play a role this week in the NASDAQ and in technology in general. But that's what I'm looking at. From an earnings perspective, Tim, in technology, you really don't have anything this week from a tech perspective. Next week, you do start getting into it a little bit with Intel, but really this is 2-3 weeks from now. That's when you start getting hot and heavy in the NASDAQ and the technology type earnings environment.
Well, and that's when the earnings season really gets very, very busy. Now, you mentioned it to me this morning. In fact, I wrote them down. I think there's like 20 some companies that on the S&P report this week, 66 next week. But in that 3 weeks
then
out,
it gets
where
like
Apple
130 after that.
Yeah, then it gets really, really busy. So we'll keep an eye on Apple for reversal characteristics. What about the other growth areas here, Matt? Communications as well. I mean, let's take a look at XLC.
Let's take a look at comms. Comms and discretionary, both of them held their 35 rankings that tackle trading. Comms, and the reason comms maintain 35 versus tech, both of them are in bearish downtrends. Both of them have found some degree of support in recent technical history. When you're looking at technology, once again, you're seeing, and again, this is just kind of how I'm seeing it. I see it as a bearish retracement. That's how I'm seeing it. I got momentum fairly similar. That's why the downgrade. When you're looking at communications, however, communications has the same thing. Lower low, lower high, lower low, technically lower high. But you can obviously see a little momentum shift that is happening within the communication space. And that support level at 80 is a very, very important support level as it fights, as that 200-day moving average does catch up. A couple stocks to keep an eye on very quickly in this space. News Corp, number one. Nailed this reversal analysis in the halftime report. It was on our stock report as well. It's on our stock report again this week as you're looking for a continuation trigger above 2450. Keep an eye on News Corp from a trading perspective. When you're looking at some of the stocks that can really help the sector, you're looking at bear stop out day already, in my opinion, from a Google perspective. Look at it reclaiming all of the moving averages. I do think you have subtly shifted your trend analysis as well, and I think you're breaking back up above that level there. Keep an eye on 2800. That's a level of resistance to keep an eye on. But Google could certainly, if it fights to be a leader in this space again, especially separating itself from Facebook, look at Google and how it performs in bear stop out. Keep an eye on that 2800 zone as well. Weekly chart looks very strong for Google with confirmation there. So when you're looking at that from a, can it provide some positive momentum to the sector? Absolutely. One of the reasons you're seeing momentum slow is based on the momentum of Google shifting as well. Google being one of the biggest companies in this space along with Facebook. But again, it's a mixed bag out there. For every Netflix of the world we can point to with a high base, amazing momentum behind it, you can go to a In communications. You can go to
Comcast,
a
AT&T,
Facebook. Oh, I'm
Verizon.
going there next.
Yeah.
You can go to a Facebook that is just struggling, and rightly so with that company. But then you go to some of the other areas and you look at the recent volatility underneath 54 and Verizon just getting absolutely destroyed. Yeah, it's only $2, but $2 to Verizon is like 6 months.
It might as well be $40,000
like
on the
literally,
arc, right?
it's a massive movement on Verizon. You look at AT&T, same degree of violation of major support levels, and you can blame dirty old Comcast for all of this, as it was fighting for the 200-day moving average. Got a double downgrade on Friday, another one here today as well. So again, from a momentum perspective in the sector, you definitely have to appreciate the slowing momentum here. That's why you're seeing a little bit of separation between technology and communications. And as you can see, Netflix has earnings next week. Obviously, it's a high flyer, and there's going to be a heck of a lot of eyes on that earnings report, especially after the price movements it has made in the past month or so. And so Netflix, for the momentum on Netflix, the reversal of News Corp and Google, then you're staring at a bunch of just garbage called Verizon, AT&T, and Comcast, and you couple that with just Facebook and whatever anybody thinks of Facebook. I got this as a very mixed area of the market right now, and little dip your toe type analysis, I would say, in comms right now.
Communications being very mixed, it does make a lot of sense. And that Netflix chart, by the way, obviously very impressive, but that stock can beat to its own drummer. I mean, it does not have to trend with the sector all the time. Recently has been
this sector is if I were to subcategorize these industries, I would have growth, defensive, and cyclical all in comms. All of them in comms. And so it's one of those sectors that is a little bit of a mini index in and of itself.
Sure. Gotcha. And we'll keep an eye on Google, that big dog with some reversal characteristics. All right. What about discretionary, though? You want to talk about a mixed bag? There's definitely a mixed bag in discretionary. The biggest component, Amazon, it's been under pressure, but then you've got breakout potentials in like Home Depot. What are you seeing in the XLY here, Matt?
Well, and that's the thing. I mean, we're hovering here right underneath the breakout channel of 185, 186. Obviously, you look at this on a weekly chart and you're like, come on, let's go. Let's break, let's run like discretionary, and let's let the consumer carry us. Obviously, you've been dealing with slowing momentum in this chart for quite some time. A breakout does change that dynamic, though. What can help that breakout potential? Obviously, earnings is going to play a major role in it. Let's first start with the stocks that are kind of on our mind here. MGM, yet again, it broke out last week, kind of confirmed that breakout last week. Now you're hovering right underneath the secondary trigger of 45 and a half by 46. Keep an eye on the MGM. LKQ made our reports as well on a multiple time breakout potential. That certainly has some interest to it. But again, when you're talking about it from a sector perspective, it's really hard to see the sector break out when Amazon just confirmed a bearish retracement. And what can help that is obviously the potential of a Tesla breakout of 800. You got to keep your eye on that one. Oh man. William Shatner going into space. Yeah, I know SpaceX is a private company, but I always categorize it all as Tesla's Elon Musk. You couple Tesla, and I say Tesla, knowing full well, again, SpaceX is a private company.
Well, he's on Blue Origin too, right?
It doesn't matter. It doesn't even matter.
I think it's a
positive
cool story.
Spot. I'm just on the story. I don't even care who's he going up with.
They're all private companies, but yeah.
William Shatner. I'm a big Star Trek fan. William Shatner going into outer space. This is a big deal. I don't even care if it's SpaceX that. Break 800, William Shatner going into outer space. Let's send Tesla to 900, everybody. Who's on board with me? I like the breakout there. Again, sector, though, that certainly can benefit the sector. And then you look at Home Depot here, Tim. And again, the only concern we have, you look at Home Depot kissing against a major breakout of 300, Tesla kissing against a major breakout of 800. You got to like both of those two potential. And then you look at the problem child.
Yeah.
And that is Amazon. And the reason they're the problem child is they're the $2 trillion problem child that represents a gigantic space in this area of the marketplace. And so unless Amazon, don't get me wrong, I'm looking at 3,200 as well. And I'm saying, hey, that's a support level that's starting to build. But again, on a day you're talking about market recovery analysis and maybe some continuation, Amazon's showing you where the weakness is. So it's hard for me to see this space getting a lot of love until Amazon decides it wants to play in the same pen as everybody else.
Yeah, and daily chart is ugly. It's got a bear retracement that confirmed here today. Long-term chart at best, you would call neutral here. Trying to find some support, no doubt about it, Matt, but been under pressure. And Amazon's got earnings at the end of the month in that really
Neutral's
busy week.
kind to it, discounting the pivot points. But I see what you did there.
Yeah, I think long-term neutral. I said the best thing you could say about it.
I know. I see what you did there.
There's no doubt about it. Let's move into cyclicals here next. And I think we got to go to financials because it's going to be a busy week of earnings on the financials and the big banks. What are you seeing here in XLF? You already mentioned the strength here.
Finance got an upgrade tackle trading last week to I believe the 25 handle here. When you're looking at that, you got to love the recovery here. A couple different technical points that I like here. Number one, last week, it could have got ugly. It didn't. It hold 37.5 right where that 50-day moving average is. That allows you to see this run into the breakout of 39 a little bit differently. Instead of coming from 36, you're coming from 37.5. That's a good degree of distance that you're not covering from the race to the breakout of 39. That's a little bit of the reason, but also you technically were above 39. You got to call that confirmation. Now, with that said, in the financial space, for every AIG and AIG you have here, nice little potential breakout. One interesting point to keep an eye on this week in the financial areas of the market that does not have earnings to it. Everything else has earnings. We can talk whatever you want. It doesn't matter. It's JP Morgan, Goldman Sachs, BlackRock, Morgan Stanley, Citibank. It's bank earnings week. This is going to be hot and heavy this week. But when you take outside the big major center banks and the brokerage firms, and you look at some of the price action that's happening in the exchanges and the data providers, interesting reversal analysis here in the CME group. And when you look at recent price movements in the ICE exchange, look at that break and look at that run. Very, very impressive. When you're looking at the NASDAQ here, NDAQ. Let me type that more accurately. NDAQ. When you're looking at the NASDAQ here, if it wasn't for earnings, that is a great breakout potential there in the NASDAQ. And so even, Tim, I'm going to show a little love to FactSet because they're doing fantastic. Look at FactSet here breaking out there today. Keep an eye on FactSet Research Systems, guys. Nice little breakout. But again, outside the exchanges, and in fact, it's an exchange too. And so you got your exchanges and your data providers. FactSet being a data provider, ICE, CME Group, NASDAQ being exchanges. You get some interesting momentum in the exchanges. Certainly keep them on the radar. But once again, this sector is going to be all about the banks this week. 39, I like the breakout of finance. I like the multiple time frame perspective on the financial sector. But again, you just know me, Tim. I'm a conservative dude, and in front of so many very, very important names that every financial company is going to kind of, go along with. I think it's one of those weeks in finance where you love the 39, you love the breakout potential, and you're just waiting on that positive catalyst called earnings, and it literally starts here this week.
And that's fair. There's nothing wrong with that. I mean, being prudent in front of earnings is usually a wise choice for most investors and traders. So you want to see it. You want to see some of the data center or data come through for the big banks. But that CME chart, by the way, just grabbed my attention. Wonderful reversal characteristics.
Chart it reminded me of on the CME, on the wicked volatile reversal. That little head and shoulders, volatile head and shoulders. Might be a little bit of PSX here.
Phillips 66 when it reversed recently.
Little volatile reversal, boom, boom, boom. Those reversals, when triggered, can be very powerful.
Can be powerful. Yeah, CME, keep an eye on that one. All right. So financials, we got bank earnings we're going to be paying attention to. What about some of these other areas? Maybe energy next, Matt. Obviously,
By the way, you have 20 other financial companies next week in the S&P reporting earnings too. it starts this week with the banks, the money center banks, the brokerage firms. Then it goes into the credit card companies and some other financial companies next week.
Gotcha. Energy here next. Phillips
Man,
66 reversal
talking
made me think
about
about it.
burying the lead, number one ranked sector at tackle trading at this point. That is the energy space. Got an upgrade yet again. How do you not?
You have to.
How do you not? Don't get me wrong. I get the momentum and the lift off, and sometimes that throws off technical projections. But this is becoming a story in and of itself here. Energy just doesn't even want to test the 9. Look at the momentum; it is absolutely real. You're breaking out on Friday. You broke out. That's what a lot of the upgrade was, with the confirmation of the flag as well as the confirmation of the next breakout. Very choppy here in the energy space here today. The nice little big red candle you see is based on the futures market run, and then the cash open kind of brought it back down to the breakout channel. And so I'm not too concerned about the big red candle, because if you didn't have the futures market price data showing here, that just looks like a doji. And so I kind of see this as a little bit of an overextended. Let's test that 56 range. I do think it's important to hold it. But again, if it doesn't, you still got that rising 9 that has been a catalyst for quite some time in the market as a momentum based indicator. When you're looking at this space, obviously we can talk about your big oil companies like the recovery analysis in ExxonMobil or the momentum in ConocoPhillips. Those have both been fantastic. But for this week, keep your eye on Devon. That's been on our reports a little bit frequently as of late. Nice little breakout, continuation breakout. Keep an eye on that one. And then MPC, multiple time frame breakout in MPC, both on the daily chart you're breaking out, and then you're also breaking out of the weekly chart at 65 as well. Keep an eye on MPC. That's been a good performer over the last few weeks as well. Those are two stocks to keep an eye on in the energy space. And honestly, don't have anything hardly negative to say about this space. When you're looking at, and this is something weird to me, when you see your oil drillers, your EP companies, and then when you also have your servicing companies like, the aforementioned Valero, VLO, or PSX, they're all flying as well. It's almost like everybody and their dog wants some degree of energy, and it doesn't even matter what it is.
Well, the momentum, the sentiment, everything around it is just very, very positive. And just take a look at crude oil. I mean,
I get it. I get it. But crude oil prices is not positive to Valero. It's not positive to Phillips 66. And so I get the crude oil appreciation helps ExxonMobil, helps Schlumberger, helps Transocean, helps the drillers out there. But that does not help your servicing companies. And so you have momentum happening in this space, and it is becoming part of just, we want to go pick up, oh my goodness, see gas prices go up. Let's go pick up some energy stocks, and it doesn't matter what ones. I'm not saying it makes sense. I'm saying the momentum is real.
But I think the sentiment makes sense to me a lot, because who here does not expect gas prices to be going up over time? From here, by the way, $3.30, $3.40, $3.50 depends on where you live in this country.
In the short term, yeah, I think all of us.
I think they do. And so people are just general sentiment, bullishness, and the momentum around energy stocks has been now very, very strong, top rated sector at tackle trading. What about materials?
No energy stocks to really kind of reference this week in earnings. Now, next week in earnings, though, you do start getting your Schlumbergers of the world.
Couple start filtering in.
Yeah, SLB comes next week. I talked about Valero. They come in next week as well. Halliburton does come in next week as well. So your big dogs don't come in for another 2-3 weeks from now. Next week, you start seeing a trickling impact of energy companies.
Gotcha. And the big names towards the end of the month. Yeah. All right. Very good. Let's go to materials next here. Obviously, that one had some reversal characteristics developing down here near the 200 period moving average. Matt, what are you watching for here in the material space?
There's a couple of things I think all of us are tracking here in the material space. Number one, FCX. You got to like the nice little reversal analysis coming off $30. Now you're starting to build a trend. You just got back above the 50 and the 200. You reclaimed the 20 and the 9 last week. All of those are positive steps in the right direction. However, we would have loved it a heck of a lot more if it wasn't that earnings report right there. But it is something to keep your eye on from a psychological level regarding the sector itself. Starting to see some reversal analysis there and confirmation analysis there as well. Then when you're looking at the agricultural products like CF Industries here, this has been the strength of this area of the market. Recent breakout here today, followed breakout there a week and a half ago, breakout from 2 weeks ago. Let's see how it navigates that next breakout. Then you have Mosaic, which is also been just on absolute fire here as well in this space. And so you got the agricultural companies doing fairly decent right now. FCX copper is starting to turn around a little bit. And a positive note on chemical companies, not specialty chemical companies, but chemical companies starting to form. And I brought this to the table last week. I'm going to bring it again. Reversal analysis takes time here, especially in materials, but I like DuPont here. DuPont setting around a known support level, more time in the reversal. That could help the sector as well. You see some other chemical companies like Dow showing reversal characteristics. You look at EMN, Eastman Chemical, again, showing a little bit of reversal characteristics at $100, which is a known support level. And so you're looking at maybe chemical companies showing reversal analysis. Can that help the sector? It certainly can. But this sector to me, and again, it did get an upgraded tackle trading, 10-point upgraded tackle trading, and again, coming to the material space, double bottom, double top analysis, really like the reversal analysis here. That's one of the reasons you're seeing reversal analysis in the chemical space, reversal analysis in FCX as well. And honestly, you might see a little bit of weakness as the bottom of this area starts to solidify itself. You might see a little profit taking in the CFs and the Mosaics of the world. I'm not going to call my shot there. Again, the momentum is really, really, really real, and you never want to, question the momentum. But in the back of your mind, you're like, all right, if the bottom of this market solidifies itself, it could be at the behest of the top of the market profit taking sessions. And so that's just something I'm kind of keeping my eye on. But until specialty chemicals becomes a little bit more of a clear picture, I find it very difficult for this sector to really trend. Specialty chemicals like Lind Holdings, like Sherwin-Williams, these are big time major components of this area of the market, bigger than FCX, bigger than your gold analysis, bigger than your chemical companies. It is your specialty chemicals. And so when you're looking at the space as a collective, we need to see a little bit more bullish momentum from your specialty chemical companies like Lind Holdings, SHW, Sherwin-Williams, showing a little bit of upward movement in price, broke back up above a lot of resistance levels. That's certainly a little more interesting to me than a Lind Holdings. So you're starting to see the analysis come in. And then when you take a look at, what was the last one I wrote down very quickly here? It was Sherwin. No, the last one I want to talk about is your gold stocks in this space. And again, we can just come to GDX here. GDX forming a bearish retracement, but it's a deep retracement. It's a very deep retracement. Let's see if that can come back into 30, give us reversal analysis there as well. And so kind of the picture I'm really kind of reading in the material space is, number one, I like the momentum shifting here in the material space. I like the recovery of gold getting back up above 30 on GDX. You're seeing some slowing momentum in the gold stocks. FCX has already confirmed a reversal. Chemicals are showing reversal characteristics, and specialty chemicals is not that far behind it. This is an area of the market I'm looking at for another week. I need another week in stabilization, especially some specialty chemical companies. But again, I like the early beginnings of reversal analysis here in the material space. That's why the 10-point upgrade. Now, again, still a very low rated sector of 45, but a 10-point upgrade or biggest upgrade of tackle trading, it gets into that preparatory 40 where you start looking at bullish uptrends.
Yeah, we're anticipating a lot of that. We need those characteristics within the different industries you just highlighted. Chemicals are going to be one to pay attention to. I love that analysis there.
Well, and not a lot of earnings either the next 2 weeks.
Not for a couple
Like
weeks
a
on this
lot
one.
of this, and materials isn't going to drive that much from the rest of the market. I think I think we're going to get some information on the market mentality towards materials throughout this week.
And I did like the reversal characteristics on Freeport McMoran Copper Gold. Obviously, the earnings are the one thing to pay attention to there, though. But copper is trying to find a little support, trying to reverse itself. All right. What about industrials here while we're on cyclicals? Last one, real quick, if we can. What are you seeing in the XLI here, Matt?
A very similar read that I got on the Dow Jones here. Very similar read that we're looking at on materials as well. Nice little double bottom, right happened right at the 200-day moving average. You're looking at a double top with ultimate confirmation above the 50-day moving average, and so it certainly has the opportunity to do that. This week in earnings, you got two fairly important companies, I would say, to this space. Fastenal, which just bounded off the 200-day moving average. Can it see some love off that recent test of the 200-day moving average? And then the big dog of them all in the airlines is reporting this week. Delta Airlines is reporting, so that's obviously going to have an impact on the space as well. When you get into next week, that's when it really gets hot and heavy in industrials, though. So this week, it's not really like, think about next week in industrials like this week in finance. 15 S&P 500 companies are reporting next week, and it's not your Deltas and your Fastenals of the world. It's Honeywell. It's UNP. The two biggest dog players on this block are reporting next week. Both of them are major influencers on this space. And Honeywell's just been out of favor recently, just showing a lot of bearish characteristics, broke the 200-day moving average. Now it's just in horizontal fun. When you're looking at UNP, obviously it's been just a crazy juggernaut of nothingness besides volatility, big volatility. And when did UNP become like the number one most aggressive company in the world? Like, when did that occur? But that's what it's been behaving like over the course of the last couple months. So maybe earnings can smooth out a little bit of this volatility. And then you have the railroads reporting next week as well. You know, CSX, one of the major components in the railroad space, they're reporting next week. Kansas City Southern is also reporting next week as well. And so a lot of double bottom, double top analysis in the sector itself. When you're looking at earnings, you're talking about really kind of next week with Fastenal and Delta starting the industrial earnings this week. But when you're looking at stocks to keep an eye on this week, and I've been talking about this for the last couple of weeks in the halftime report, and you're seeing some influence of that on the actual reports, the stock and the options report. My favorite stock trade of the week, if you go look at rapid fire from last week, was ERJ here. Like the double bottom, like the double top, nice little breakout there. And then when you look at, also take a look at RTX on the options report, Raytheon here. Aerospace and defense has really started becoming a leader in this space quietly. You look at Boeing trying to fight back up above the 200-day moving average as well. So keep an eye on aerospace and defense type companies. They're trying their best for some degree of leadership position within the industrial space. But again, a lot of this relies on next week's reportings. But as of right now, double bottom, double top. Couple areas of the market to keep an eye on: Raytheon as well as RJX. ERJ. Keep an eye on the aerospace and defense areas of the marketplace.
Industrials got some interesting trade setups in there, like you just highlighted. That ERJ chart was looking really good. So we'll keep an eye on some of those. And you're right, the volatility around railroads has been real. That Union Pacific chart was interesting, and W pattern off the bottom, but increased volatility the last couple of months is unique to that company. All right, quick flash through the defensive if we can. You know, healthcare, staples, real estate, and the utilities. What do you see?
Healthcare ranked right there at 45. No upgrade, no downgrade. Similar volatility, similar trend, and we got this as a bearish retracement coming into the 9. Nothing is good in this space from a technical perspective until you start thinking about 125. Before you think about 125, you see this as a very similar momentum trend. The chop there, the chop here, nothing has changed. Riding the lightning hasn't even came into the thunder yet, just riding the lightning. But again, where could reversal analysis come in? Traditionally, reversal analysis comes in around the 200-day moving average in short-term downtrends against the backdrop of bullish primary uptrends. 200-day moving average is right there at 123.27. But I'm looking at this 125 level, 125, 125, 125, 125, backdrop 123. And it's kind of the same analysis that ultimately fell initially, but succeeded later, was the GDX analysis. If you'll remember this one, Tim, when we were looking at GDX, and my argument was about 30, right? 30, 30, 30, 30, 30. But the argument of 30, the reason I made the argument of 30 was historically, I liked 30, right? 30, 30, 30. Historically, I like 30. Nothing in the momentum had shifted. Nothing in the momentum has shifted. I was calling my shot to a certain extent. I like 30. Why did I like 30? Because I said very quickly, anything under 30 and above 28.30, that's all a zone you can easily just write covered calls to offset. If it ever violates the 200-day moving average on the weekly, it's just get out moment. And so I like the backdrop there. And so if you look at that as you like the backdrop, you like number 30, but you like the backdrop behind it, the backstop behind it, that's at 28.30 level. When you come to the healthcare areas of the market, very out of favor, by the way, extremely out of favor. You go look at some of the individual names in this sector, and we will here in just a second, very choppy, very volatile. But again, I like the number 125. I like the backdrop of 123. That's what I like about this space. Now, from a stocks to keep an eye on, TMO. By the way, this is the best it gets in healthcare.
It don't get much better.
This is the best it gets in healthcare right now. Okay. I know it's choppy. I know it's a crazy volatile retracement. And quite frankly, Tim, last week I did a Fibonacci retracement, Fibonacci extension as tied to Elliott Wave Matt's whiteboard. And I hope people enjoyed that. If I were to draw this, bro, like legitimately draw this.
Yeah, give me a fib here.
You want a legitimate fib? Like a legitimate fib?
That's deep, bro.
Like it's not even working. It's so crazy. Watch this. Oh no, it's destroyed. It's not. It's like targeting 116 as a crapshoot. Like it's just, and that's the best it gets. That's the best it gets in the healthcare space. Again, my point is this: healthcare makes sense at 125.
Sure.
But I do think we have to see some more evidence at 125. And I think the market is telling us today that we're going to get that evidence fairly quickly. And so double bottom analysis, slowing momentum analysis makes a lot of sense over the next week, 2 weeks, especially as we start getting into earnings season in the healthcare space. And with healthcare this week, you got United Health, you got Walgreens. So you got two fairly big names. Next week in the healthcare space, you got 7 major companies. And so you start to get them this week. They trickle in next week as well. They get hot and heavy the week after. Keep an eye on this space. So this is one of those radar ones that you hate the top of this space. Like literally, again, I just want to go back to the best stock in this space, in my opinion, and I'm talking from a trader's perspective, and it's Thermo Fisher, which had a 98% retracement on the Fibonacci, which destroys any bullish retracement analysis that's ever been done. And that's the best case scenario from a technical perspective. I think the patience rides out here at the bottom of this space, because you do have some concern in the healthcare space. For every Thermo Fisher, which looks okay.
Yes.
Okay. Not great, not good, but in a world that looks like garbage, it looks like the best garbage type thing. Well, again, for every one of those, you have something that looks like Johnson & Johnson.
You're just looking
kissing towards the lows, a little low base analysis, right? You have Pfizer, kissing against the lows, a little low base analysis. You have, what was the last one I wanted to pick? Eli Lilly, potential reversal analysis. Okay, so here's my point. And sometimes it does take a while before I get to my number one point. My point is, I don't like this space at all this week. Like, it's garbage. It's 45 ranking at tackle trading based on similar momentum, no upgrades, no downgrades. You have the top of the market looks like Thermo Fisher, volatile bullish retracements that if you actually include wick analysis can't be considered bullish retracements. When you look at the bottom of this space though, the Pfizers, the Eli Lillys, the Johnson & Johnsons, these, I think if you look at the healthcare space from I like 125, and I like the backstop of the 200-day moving average at 123.5, 123. I think you give this space a couple weeks, the bottom of this space looks a heck of a lot better, in my opinion, than trying to chase momentum at the top of this space. I think this is one of those areas where we just show a little bit of patience. We let the analysis at 125 work itself out, and let that industrial analysis take hold here. Let that basic material analysis take hold here. 2 weeks ago, we were hating basic materials. It's a wonder how this works once you start seeing support build and resistance build. Industrials was a hot mess of nothingness 2 weeks ago as we were forming a bearish retracement with momentum and we were going to kiss the 200. Well, what do? We formed a bearish retracement and we kissed the 200, but the 200 held, and now you see the picture a little bit differently. Healthcare, you see another week of slowing momentum. You couple that with momentum shifts in Eli Lilly, Johnson & Johnson, and Pfizer. I think you start solidifying the bottom of this market, very similar to what industrials and very similar to what basic materials are doing. Think about those areas in basic materials we're looking at right now. You're not looking at chasing anything right now. Like even the agricultural products that you love, like Mosaic and Ag, it's all bar by bar analysis at this point. It's all bar by bar analysis at this point. A trader like Mark, he doesn't like anything about this.
Nothing.
Even
about it.
But even a trader like me, an aggressive swing trader, it leaves a lot of traders behind. It does. But you know what? You come into the bottom of this market and you start looking at, say the chemical companies, once again, like EMN. Mark, you start to like that picture a little bit differently?
A lot better.
A lot better because it's starting to slow its momentum. And so once again, you come to the healthcare space. And again, I'm not trying to throw water on Thermo Fisher here. Okay. That is not my intention at all. I see the trigger and I accept the trigger above 589, and I think you can drive it to 600. I think there's a heck of a lot of better trades out there, but I'm not trying to discount this one. I'm just saying, if this is what the top of healthcare looks like, then maybe traders should stop trying to chase the top of healthcare and allow that bottom of healthcare to stabilize. And then it looks a heck of a lot better in a week or 2 weeks from now.
Well, and then
I mean, there's companies, Matt, like Boston Scientific,
BSX.
BSX. I mean, I'm really hoping that a nice bottoming pattern develops here. It's on my watch list. I'm watching it. It probably will correspond with healthcare, the sector getting stable, right?
Yeah.
Like create that want list. Let the technical pattern play itself out.
Sure. Gotcha. All right. Very good. I think we only got one or two more sectors left here, Matt.
I can do this rapid fire style because we're just talking about staples, utilities, and real estate. That's it.
That's right.
Okay. And so let's start with consumer staples here. Consumer staples got a little bit of an upgrade, 5-point upgrade. Got to like the shifting volatility right around the 69 level, right where the 200-day moving average is. One thing to keep an eye on is a little bit of a battle between the discount retail stores, Dollar Tree, DLTR, trying to fight against a nice little bullish momentum trigger above 100. But then for every Dollar Tree you have that hypothetically may look good, you got a Dollar General that looks like a nice little bearish retracement about to get splattered. So that's something that is more entertaining for me than anything. I don't like either one of them, to be perfectly honest with you. And then when you take a look at some of the bottoming nature of the market, you're looking at Colgate here. Maybe it has bottom analysis, maybe it doesn't. We got to wait to see that one play out. Mondelez looks like just a hot mess right now. Bearish retracement. Look at that bearish retracement. Kiss. Look at that momentum just get absolutely just destroyed, called the 200-day moving average and your previous pivot point at 60. So the stable space is not a space that I would be looking at over the next week or two.
Stay away from it. Yeah, definitely. All right. And by the way,
not just because it's boring. Outside of
Neutral.
there's a couple shorts that like Mondelez here that look fairly interesting, but any bullish scenario I think needs a little bit of time correction.
Gotcha. All right. As always, appreciate you running through that for the team out there. And by the way, guys,
I'm not done.
Are you not done? Utilities? All right, we got utilities still.
Tim's like,
I don't care about utilities.
Listen, Matt, you've been talking about sectors for 45 minutes. Are we done? Yes. No, we're not done. There might be one or two of the tackle traders that want to hear my analysis in utilities, and so we're not gonna discount that.
Let's hear it.
Duke, I'm gonna try to make utilities sexy here. Hold on, give me a second. I can't. I'm sorry. It's utilities. I will say this though. Utilities is a hot mess of nothingness as well. One of them that, if it does stabilize, to keep an eye on. And the stabilization comes with the double bottom around the 200-day moving average. We've talked about that in other sectors. If we do see the stabilization, Duke here has an opportunity. This is looking like a 1, 2, 3 bullish reversal type scenario coming off the 200-day. You have shifted trends, shifted everything. Keep an eye on Duke, and to a lesser extent, in my opinion, maybe an AEP. Looks like garbage, but keep an eye on that around 82. Duke is the one I'm looking at, though. I do like some Duke. In the real estate space, nothingness, no upgrade, no downgrade, just a little bit of shifting momentum. The only stock to really kind of keep an eye on is Open, which did make our stock report with a breakout on Friday. Continuation nice. Above 22.5. Look at that here. Look at that. Tim, I know you want to go, so I'm not even going to change my box. Look at the Fibonacci box range breakout there. Reclaiming the 200 was step 1, 22.5 was step 2. And it looks like 25. It might wants to see 25 before that nice little blue icon called earnings. And now, Tim, I am done.
I'm glad that you continued because that Duke chart and that Open chart are both interesting.
Yeah,
I'm going to keep
every now and then you can find something, and Duke might hypothetically be that.
Find a diamond in the rough. All right, very good. Let's move on then. Let's keep moving through the markets one step at a time. I do want to move into stock talk next if we can here, Matt. We've kind of hit all the big picture items so far. There's only a couple things that I do want to talk about in stock talk, but before we do it, Matt, I cover a lot of these stock stories on a daily basis. If you can head over to the website, I do want to drop a little promotion for the Huddle podcast. And if you're out there and you love markets, you love news, and you've not yet done it, the Huddle is a daily podcast that we put on at Tackle Trading. We find the top 5 stories of the day. I always write about what's going on from an economics perspective. We're going to be covering a lot of these earnings reports over the next few weeks as well. I guarantee that. So get the Huddle podcast, subscribe to it on any of your favorite podcasting apps. I listen to it on my iPhone. So right on the podcast thing. And if you put in the search, the Huddle Tackle Trading, you'll find it. There's a few different ones with the phrase the Huddle in it, but the Huddle Tackle Trading, you'll find that podcast. Or if you head straight to the website, Matt, you can always just get the write-ups. We publish this every day after the market's closed, 5 o'clock Eastern. Wonderful, wonderful podcast for you guys to follow out there. I'll drop them a link. Anything you want to say about the Huddle there, Matt?
Huddle is a fantastic way to stay on top of all the marketplace in less than 10 minutes. So basically what I just did in 45, Tim does for you in 10.
And that's the whole design. Make it efficient for you guys out there when you're busy, on the go, getting it on the way home from work, something like that. So make sure you subscribe to that Huddle. Couple quick stock stories I do want to cover real quick, Matt. Number one, Merck. We covered this earlier in the month. MRK, positive development for the reopening trade, for what's happening with COVID in general, all that kind of stuff. Merck did submit their application to the FDA for that emergency use authorization for their oral pill. That's just an update on a story that we've already kind of covered. That's where the gap out came a few weeks ago. Good story. Is there anything in the chart at all here, Matt, in terms of
this garbage tick they got to clean up?
Tick.
But if I could scale appropriately, yes. Gap up on positive news sets a higher level of resistance, also coincides with a very well established and well known resistance level historically. And then you're double back coming into support around 80. Yeah, I do think this is something to keep an eye on the first test of the 9 EMA. So
I agree.
yes.
I agree. All right, very good. Just two more then from here. Let's go to Southwest Airlines yet. If you had a trip booked on Southwest Airlines, you might want to check that booking, make sure that's still going through. They had to cancel about 1,800 flights, Matt. They're citing, a lot of industry analysts are saying they overbooked. They were trying to do something a little bit more aggressive than they should have. They ended up having to cancel 1,800 flights. They cited air traffic control issues and staff shortages. Stock took a gap down here. Does this blow up the pattern for you here, Matt, on Southwest? Is there anything here that we should be paying attention to at all?
No, it doesn't blow up the pattern because the pattern's a choppy mess of volatility, nothingness, and this is more of the same.
Nothingness on Southwest. All right, last one here. Just give me a theater. Give me Cinemark. Let's give Marky a good feel story here. Over the weekend, No Time to Die brought in another $56 million across many different theater chains.
What's Cinemark? CNK?
CNK. Marky, obviously, this is something you've been tracking, you've been watching, you've been waiting for these movies to come out. Pretty decent showing in the U.S. Bond film, I think it was the third highest or fourth highest of all time in the Bond franchise for U.S. opening, and 310 million globally in 2 weekends now. Mark, are you still on the theater trade here? And
I've been waiting for it because once again, like when Matt was showing the mosaic chart, I don't like things when they run. Doesn't give you a clean entry. I caught the clean entry, 2-3 weeks ago. On the breakout, looking for a pullback stabilization. And then I think there's a signal, you always wait for the signal. The movie theater results over the last month have been insane from a fundamental standpoint. Creates a lot of stability and a lot of good cash flow trades. Could have a nice directional trade. You come down here, that rising 20 at some point, get a doji, get some stability, get an upward signal. That's what I've been waiting for to hit. And let's hope I get every once in a while you get what you want, right? Every once in a while you get what you want. We'll see if we can get that stability and doji signal here.
Need doji. Matt, you agree with that? Needs a doji here. Obviously, a little pullback.
Are you kidding me? A doji on the 200-day moving average on a significant whole number that coincides just at $20, which is one of the number one significant whole numbers. This is pure needs a doji status, and it needs a doji followed by an upward movement in price. That's pure technically. If that does,
that's a pretty clean, pure technical pattern in an area I personally like.
Well,
so we'll see if we get what we want.
At a very, very well-known area of support by the marketplace. Yes. So, and again,
whole number, known area of support, 200-day, rising 20. My goodness gracious, you get a doji here. I don't know how you don't play it.
Doji, let's go.
Is Bond one of your favorites, Mark? Are you a fan of Bond?
I like Bond. I like a lot of different things, but it's not something that I like.
Not your favorite. So you aren't one of those attendees.
I'm not going to go to the theater for Bond. It's just not my thing.
Something else.
But I appreciate it, right? I appreciate it.
And then the last one here, Matt, you already mentioned it. Give me Amazon. He actually is flying on Blue Origin. I think it's just a really cool story. 90-year-old William Shatner, he was the head of the Star Trek Enterprise there, Matt, obviously from television and film. We all know him, icon. He is heading to space on Wednesday.
Where does he rank in the greatest Star Trek captains? I want that debate on the podcast.
I would love to have it. Picard?
2? Picard's 1.
Picard's 1 for me, always will be.
Picard's like Ben Kenobi. It's like Obi-Wan, and he's the number one Jedi.
I love
number
Kirk.
One captain.
It is no disparaging on Kirk. I love Kirk. Just Picard.
I'm not sure I'd have Kirk as 2.
Well, you two are much more Trekkies than I am. You know a lot about the lore. You've dug into a lot of the different franchises.
Can you name another captain outside of Picard and Kirk, Tim?
I was just going to say, I don't even know if I know other captains than Picard and Kirk. So this is not a debate that I'm going to be able to add a lot to. That will be a debate for Mark and Matt if said debate will happen. But I think it's really cool that William Shatner's heading to space. I just do. I think it's a really cool
90.
Feel story.
He's 90 in space.
90 years old.
90
in
in
space.
He's awesome. He's an awesome.
He's amazing. He's amazing.
All right. That's it for stock talk.
I think it's a cool story.
Yeah, I think.
I just wish he was on a Tesla Falcon 9. That's all.
Is he going to wear his Star Trek captain's shirt.
He absolutely should if he doesn't.
He should. Yes. I
He
guarantee we're
absolutely
going to get
should.
quite a few references. All right. And now here in Gino's voice, actually, we're going to move into our very last segment here for the day. One thing we've been doing each and every Monday, we got a veteran coach and trader here from Gino Poor. He is one of our lead coaches over at Tackle Trading, does a lot of our lounges and nightly shows and webinars. He's designed courses, wonderful trader, somebody that you want to learn from. And one thing Gino's really great at, he's got these little tricks, these technical tricks or software tools or whatever it is, little hacks that he likes that help him with his daily trading execution. We call them Gino's Gems. And Gino, you got one dialed up for us today. You're up, man. Go for it.
Yeah, so Tim, this is going to take me a few minutes because the issue I'm going to solve is harder to explain than the solution. So I'm going to dive into that real quickly. But the trader hack I want to show you today, guys, is probably the most important. I say this every week, probably the most important. But it's about position sizing, and a lot of it has to do with basic math. But, basic math sucks. Unless you really like math and you're going over a lot of charts as a trader. If you're not real good at math, you're going to love this hack because the most important thing about trading is risk management. And you guys have seen me, I've seen probably said, I don't know, a million times, Tim, and you've probably seen this too, is position sizing is your first line of defense when it comes to risk. And I don't know about you, Tim, you and I talked about this, and I think Mark and I have talked about this, but a lot of problems we see with students' portfolios or brand new traders is they position size wrong. Sometimes it's too big. That's the big problem. They position size wrong as far as not the consistent amount of shares. They're just not doing the math. They're not thinking about the risk, and it catches you off guard. So this simple little tool, it really is cool. And, you guys know Frank Martin, Breakout Frank. I see him using this all the time. He loves this. Now, I'm good at math. I can do math in my head. Sometimes I make mistakes, and, I probably should be using this tool more often. And I use it a lot to build our stock and options report. So let me show you how I do it. So I'm bringing up a chart. Do you see this chart here, Tim? I just randomly picked Apple. Is that showing up on yours? I just randomly picked Apple here just because this is an old chart. It's like a few days old, whatever. But I was just looking for an example. So when you look at a chart, the first thing you do is you're trying to figure out, where do you put the entry? Where's your trigger to get in? Where's your target? Because if you're greedy, of course, you're looking for profit. That's why we're doing this, right? But this tool I'm going to show you solves two problems. The first thing is, where do you put your exit? So like there's many choices. Like if I put my exit here, and we use different rules on our step system, our swing trading system. So as a swing trader, I might put it below this candle, or I might put it below this candle. Now there's two issues going through your head here. It'll take me a couple of seconds to explain it, but I just want to make sure we're all on the same mind path here. We're all on the same link. And then when I show you the solution, you're going to go, oh, that's cool. So if I put my stop loss here, it's kind of close to the entry, but look at how big the reward is to my stop loss. That's a good risk reward ratio, right? But if I put my stop way down here, it gives it room. It's definitely a stronger support down here, less chance of getting. So if I get in here and I go, it goes, less chance of getting stopped out, right? So I want a wide stop, but I do want to target. So your basic entry, target, stop loss. So the biggest question we get all the time is, where do I put my stop loss? And what you really should be asking yourself is this: if I put my stop loss there, and I'm going to zoom into this so you can see it. If I put my stop loss here, how is that different from the stop loss here as far as position sizing? That's really what the mathematics is about. So number one, if I get in here and I put my stop here, how many shares do I use if I put my stop loss at exit 1? How many shares? Versus if I put my stop loss at number 2. See, the shares are going to have to change because this exit number 2, it's much further away. So you have to use less shares. Well, that can take you all day trying to figure that out. And if you have a calculator, so you know what most people do? They do it the lazy way. They go, I'll just do 100 shares. I'll just do 50. I'll just keep my eye on it, right? I see that a lot. And you can't do that. If you're running the business of trading, you cannot do that. You have to be consistent and correct. Your position size has to be consistent. Then finally, Tim, And this is secondary. This is secondary to the whole problem here. What is the risk versus reward? Or another way of saying it, what's your ratio of profit to risk? Is the ratio, are you making enough to justify this risk? So the simple tool, let me jump into it here, is on TradeView and certain softwares, we do have this built into our stock and options report for you. You can simply do this, two things. When you log in and you go to your watch list, first thing you do is you type in the account size you're trading with. And then second and finally, what percent risk do you want to trade with? And now this could change daily, this could change weekly, but this is consistent. By using a percent, it's consistent. And guess what? No math needed. The software does everything for you. So once you put that in, which actually takes like 2 seconds, I'm going to do it for you here. Boom, check this out. If I click on that tool, it says if you enter here and you put your stop loss and exit 1, you need to do 123 shares. That's 1% of your account risk. But if you put your stop loss down here, guess what? It changes it to 38 shares. No math needed. It's still 1% of your portfolio risk. You don't have to figure out how many shares. It's perfect right to the share amount. And what I do, Tim, is I usually round this down a few shares to, if there's commissions involved and stuff. Secondly, let me go back to that. See my stop loss here of 123 shares? It also tells you my risk reward ratio is 1 to 6, which means I'm going to make $1.6 for every dollar I risk. So that's a good risk reward ratio. It's not quite 2 to 1, but it's better than 1 to 1. But if I put my stop loss down here, it drops my risk reward to 50 cents on the dollar, which isn't real good. So watch how easy it is to set up. This is so easy. I'm going to bring up our stock report. I'm just going to randomly pick, this is last week, guys, because only our pro members get the updated this week. I'm going to pick News Corp here. Now, if you guys are pro members, or if you want to be pro members, just log in. It's in here. It's in here. You just go through the watch list, and we got quite a few picks. So watch how simple I do this. This is really easy. All you do is you find where you want your trigger point. What do you think, Tim, right about there? 24.60. I'm going to go with this double top here, right? And right away, I'm thinking a stop loss either here or here. So I find, my entry. I go over here to the position sizing tool. You see the little hamburger thing here? I click that, and I go back to my entry. Boom. Now check this out. I'm going to bring it over to the left so you can see it. If I put my trigger right here at 24.60 and I can adjust it, I'm going to move my target up to the top of these candles. Now, I'm not worried about my target right now. You see how this little settings button pops up? I'm just going to pick a random, I don't know, let's say a $15,000 account, step 1. And final step, I'm just going to say, I don't know, 1%, 1% of my account. And I could even say 1.5, I don't know, 1.5, whatever it is, keep that consistent. I'm going to use that percentage on every trade. I hit OK, and there you go. So if I put my stop loss below this candle right here, 330 shares is 1% of my account. If I put it below this one, 151 shares is 1% of my account. So my risk is consistent. Even if I put my stop loss way down here, guess what? 73 shares. I didn't have to do any math. Isn't that nice? I didn't have to do any math, and I could literally, and I'm going to say, okay, now what about my risk reward? My risk reward here is 53 cents on the dollar. Don't like that. If I go right here, that's a 1-to-1 risk reward with 146 shares. What if I do like a breakout Frank trade just below this one? Now there's a Frank trade right there. 2-to-1 risk reward. See, my reward's twice as big as my risk. 292 shares and done. Now, last thing, Tim, watch how easy it is. Once I've typed it in there, I can just go to the next stock. Here's RF. I'm going to put my trigger. I'm going to grab my trigger. I'm going to put it right there. Let me put this to the side so you can see it. And I want my stop loss right there, 175 shares, done. Now I want a 2-to-1 risk reward. I'm going to bring this up to here. Let's say 1.5 risk reward, right there, done. So here's my target, 1.5 to 1. You know what? I want to put my stop loss a little farther, 129 shares, done. So I could literally just click any stock now, and all I have to do is hit my position sizer, trigger there, And I'm going to put my stop loss right. I'm going to move this aside so you can see it. I'm going to put it, that's pretty logical, right there. Based on that, 42 shares. Math is done. And if I click my settings, I'm set at 1.5% risk on a $15,000 account. Simple as that. Like I said, the solution is much faster than the problem. But that is so important that you use a tool like that. Finally, Tim, you're saying, but what if I do options? We'll get into this next week, but you see my shares here, like it says, let me move this to the side a little more. 39 shares, you'd be using a 39 delta. If I put my stop loss closer, 59 shares, I use a 59 delta. So I'd buy a call with a 59 delta or 2 calls with a 30 delta. That's your delta or your shares for your option traders out there. There it is, guys. A little bit lengthy, I know, but that is a very, very important tool. I love using this. We have it built into our stock and options report, and you just have to set it up with her. Again, the settings button's there. It's right here on your left. And it's a tool to make life easy, but it is essential. Next week, Tim, I'm going to do another one just like this, but we're going to use the Tackle Trading Journal position sizing tool.
I love it, Gino. In fact, I was just going to mention that there's also a position sizing tool in our journals at Tackle Trading. And these trade view charts, they're the ones that we use for our reports and our newsletters, those type of things. So learn this tool. I mean, it's right there when you're going through your weekend report, when you're getting your picks, when you're going through the analysis. You can do some mapping from a position size, target, and stop loss perspective. Now, the Gino gem. Very good, Gino. Thank you for sharing that with us and with the team. Let's start moving into final thoughts here on a Monday. Matt, you first. Final thoughts for the team out there, things you want to leave them with to think about.
Just first of all, thank you, Gino, for the Gino Gem. Really appreciate that. We do have Tackle onboarding on YouTube later tonight. So if you're new to Tackle, want to figure out our weekly schedule, when we release content, webinars, blogs, scatter reports, newsletters, or any other product that our community enjoys, get into the onboarding session with Frank. Frank does a wonderful job on that. So definitely check that out. We'll also have another edition of the Trading Justice podcast later on today as well. So look forward to that as well. And as always, come through the weekend. Make sure to check out those scatter reports in the Tackle newsletter when you get a chance as well. Those are all timely, very timely, I would say. So hope you enjoyed those scatter reports. And if you haven't had a chance to get into Tackle's Discord, if you're a pro member, you will be receiving an email from us shortly, either today or tomorrow. Just need to get that done to our Discord channel so you can enjoy our Discord community. And in Discord, you'll see some private channels and some public channels. The public ones are for pro members. The private ones are for like trading labs and specifically like that.
Love it. And by the way, one quick programming note as well, in addition to all of that, just if you're in Tyler's trading lab, he normally does them on Wednesdays. He's going on vacation tomorrow. He did move it to Monday.
Tyler thinks he can have a vacation?
10-day vacation.
He took a vacation 2 months ago. This man's life is a vacation.
He's living the dream, man.
That's all he does. And all of a sudden, he golfs it everywhere, and he goes on these staycation type things. Like he's living a life of luxury, Tyler.
I agree.
Wow.
Yeah. Enjoy your vacation, Tyler. And
I fully expect on the vacation, our community demands an awesome option report next week, Tyler.
Make him do it from the hotel room. All right. Any final thoughts from you out there, Mark, for the team? Anything we missed?
No, just, don't be too fearful. Don't be too greedy. Find your spots, pick your spots where they are when they present themselves in the market. I mean, if you look back and we have a choppy, whatever happens, the market, I think it is don't be too fearful, don't be too greedy until we get some kind of signal in the market. So, pick your spots. And
we're going to be analyzing it day by day here on the Halftime Report. If you've not done it yet, make sure you click that subscribe button, click the bell. That way, whenever we go live, you get alerted. You can come and join us here on YouTube.